What's up, YouTube? This is Mike, the Entrepreneur. Today we are going to be talking business budgets, and we're going to do that right now. What's up, everyone? This is Mike, the Entrepreneur, coming back with some more entrepreneurial content. If you are new and you are thinking about starting a side hustle, you want to manage your side hustle, or you want to grow your side hustle into an actual business and get everything going, make it look all good and legit, please consider subscribing to my channel. You could do that by hitting that subscribe button, also banging on that notification bell, so whenever I drop some entrepreneur content, you are notified. So today's video, which is the reason why you clicked on it, is going to be side hustle or small business budgets. Now, the biggest misconception when it comes to small businesses out there, side hustles, is they really just take it day by day. They take it dollar by dollar, and they don't manage their finances for growth. And I think the one thing that you need to do as a side hustler, the better you are at managing that money and budgeting that money, then you can grow and scale your business for the future. So sometimes you might be sitting on a gold mine. If you manage it correctly, it could replace your 9-to-5 and actually bring you a lot more money than you were thinking and a lot more opportunities than you were thinking. Last week, I shared my free business template with you guys, and I honestly didn't think it would be okay if I just left you guys without any explanation. I actually think there's a lot of things in that template that I want to go over. So what we're going to do is we're going to head into my computer, and I'm going to show you guys all of the features and how to actually navigate and utilize this free budget. If you want to download this, it is free. You can go down into the description below and you can click on that link. So let's go. Okay, you guys, we are now in my computer. So I'm going to show you three things. Number one, we're just going to go in and we're going to look at everything that this template offers. Secondly, we're actually going to go in and we are going to just fill out some information for January. And then after that, I want us to look at this last portion down here, so you can actually go in and figure out, what your savings should be, and then what your operating costs, and we'll kind of reconcile all that. And this is something that my advice is something that you do frequently throughout the month. I like to do mine on the 1st and the 15th. You should at least do it once a month, and that should be at the beginning of the month, so you can close the month prior. So you can go in and reconcile any of your bank statements and things like that, so you know how much money was coming into your business and how much money went out of your business, and then how much money you have left over, so then you can report that, carrying it over, so then you can actually budget out everything for the full year. So the first thing you're going to see is it's broken up into 3 different sections. You have your revenue, you have your salaries, and then you also have your operating costs. If you scroll down, you'll have a couple of calculations. So this will tell you what your total revenue was for that month, and that is both your carryover and your new revenue. And then this is going to be current month's revenue, so you can kind of see the difference. So let's say this is at 1,000, but then you had 500 that you carried over. So really you only made $500 in new revenue. The next thing would be accounts receivable. So this is if you still have any accounts receivable to you. This is accounts payable. And then this is your total cost that you actually paid out in that month. And then this is your end of the month capital. So this should be any of the money that is left over from your revenue from subtracting all of your cost of goods or your expenses. And then what you could do here is this is where you can select the amount of money that you want to go into your savings. So if you want 1% of your end of the month capital to go into your savings, then you can do that. That's actually good. This is something that is really useful for us small business owners, because then we can actually start building up capital within our business. And then last but not least, down here, you just have notes. So if you have anything down here in particular for your budgeted, you can put notes down here, and then same thing goes for your actual. So if you overspent or whatever the case may be, you can actually put the notes in for that month. So now let's scroll over, and you'll see this is a yearly report. And this to me is by far the best thing that you can look at and see, because it imports all of the information that you're entering over here. What's going to happen is as you start entering information into the individual months, it's going to calculate all of that here for you. So we're going to do just a mock January. We're going to enter some information in, and then you'll see what that looks like over here. And then this is also extremely important too, because I'm all about building assets and adding more things into my asset column rather than into my liability column. So I'll link a video somewhere inside of the screen so you guys can see different ways that you can, build your asset column rather than build your liability column. But essentially, this is the place for you to track all of the assets within your business. So I already put this one in. So this would be any capital. So the way that you would do this is, let's say you have leftover capital inside of January, and then you have that savings. So you want to actually take out 10% of the savings, and then it tells you the number that you should put here. So what you should be doing is through your bank account, you should be taking that dollar amount and you should be inserting it into your capital savings. Okay, so that's a whole total different stash that is just sitting there, and it's just money that you can use to actually go after, business acquisitions or equipment, things like that. Any growth initiative, you would be using this capital savings account. So that's why that's already there for you, and there's no dollar amount. So you just put in a dollar amount, and I'll show you guys what we can do for that. So let's go in and let's actually do or put in some information for January. Let's say in December we made $3,000, but we had a carryover of $1,500, right? So that means that money is not, that's free money. It's not tied up in anything. And then let's say for this month, we were a little short. COVID started to poke its head through. So we only made $1,000. And then so accounts receivable, remember, this is something that you're expecting, because let's just say hypothetically mid-December, I sent out an invoice for $250 to a customer, and unfortunately I did not receive that until January. And then same thing here, except for it's the opposite. So this is something that I owe to either a client or I owe to a vendor. And let's just say I'm just $100 because I ended up spending some money, let's say to fulfill this order, I had to spend $100. So let's just say they're related. They don't always have to be related, but in this case, they were related hypothetically. Okay. And then I would go in. So you'll see right here, you have salaries. So we just entered our revenue. We have salaries here, and then we have our operating expenses. So for salaries, for ownership, I gave you quite a few options that you can use. You have multiple, I think it's probably 5 different owners, and then you have payroll. So that's if you have, if you actually have employees, or if you have 1099. So that means you have independent contractors that are doing work for you. You have space for them. So this is 10 different people that are getting paid. And most us small business owners, we don't have 10 people. We might just have ourselves and maybe one other person that, we're contracting to do stuff for us, or maybe 2, maybe 3. Okay, but what I would do is I would go in and I would select a type. So there's 2 different types. You have variable costs and you have fixed costs. Variable costs and fixed costs are self-explanatory. Variable cost means that it actually fluctuates throughout the month. And then fixed cost means that it's something that stays the same no matter what month. So for example, if I have a certain utility bill, so let's say I have a storefront and I know that I have to pay $1,000 in rent, then I know that that is a fixed cost. But let's say my gas and electric for, my storefront, that fluctuates depending on how much I run my machines. So you just want to go in and identify what type of expense that is. For me, when it comes to anything payroll, for myself, I like to keep it consistent. So I want that to be fixed. And then for other payroll or 1099, it depends. I go back and forth. It depends on if they're just project based, like if I have them on a project for the full year, or in and out, so I want to kind of keep them happy and I keep them busy, then I will put them on a fix. But it all depends, and that's the good thing about this budget. You can actually go in and make those modifications. But let's say I'm going to put my name in. So that's me. And then let's just say I want to be modest. I want to pay myself $200 a month. And I can go in and add, that's why it's a budget. I can go in and budget myself to get $200 per month, and that'll give me $2,400 for the whole year. But we're just going to do, like I said, we're going to do just January. And then the good thing about it is, let's say you get to December and you haven't made enough money. When you look at your year, you're like, oh my gosh, I have to change the amount of money that I'm paying myself. Or that could just be an incentive for you to actually, get more money later down in the road, so you're not running out of your budget. Okay, so let's say I don't have any payroll. It's just me. I want to pay myself $200. And let's say in the month of January, I had, let's say, Michael's. So let's say I had Michael's, and I went to Michael's to pick up something or pick up some supplies for my business. I had some last minute supplies. This is a variable. And then I would go in and say heat press. Supplies. Okay, and then I can go in if I budgeted for it. That's good. Like, I do have a little bit of money, so I can budget for that. But let's say I didn't, and I just have what I spent. So I spent $100 at Michael's. Okay, and then let's say my next expense was, let's say, t-shirt place. So there's this place that I go to and I get all of my blank tees, and this is also a variable cost, but I'm gonna say blank shirts because I had to use that. And then let's just say I spent around $200. Now let's say I actually did go in and budget for it. Let's say I budgeted $225 for that. So when I got these orders, I actually budgeted $125 to get on heat press supplies. And then let's just say I priced this out exactly, so $200. So let's say that's what I budgeted for it, and this is what I actually spent. And then let's say I actually did pay myself the $200. So you'll see everything here calculates. So I'm under budget because when I budgeted for the month, I budgeted $525. I only spent $500, so I'm under budget by 25. So let's just scroll down, and obviously each month is going to get bigger. You might have more expenses. What you want to do is you want to put the actual name of the expense. So I like to put the vendor of who it is, and then I put the purpose. So let's say I have McLogan's. McLogan's is a place that I get all of my silkscreen supplies from. So I will put McLogan's here, and I will put exactly what I spent or what I spend that on. So if it's actual press supplies or it's ink, like I will specify what that is, and then I can budget that out. Because the goal is for me to use that line across everything. So if I have squeegees here, if I have inks, I might have 0 this month, but I might have 25 this month. So it allows for me to utilize that entire line. Okay, so now let's go down here and look at this information. So my total revenue for the month was $2,500. This current month was just $1,000. So I only made $1,000 in this month, but I had basically $100 or $1,500 for that I carried over. Accounts receivable. So the way that I can change that, let's say this was satisfied, so the customer actually did pay that, and then let's say I did pay back my vendor. So now both of those are 0, so I don't even have to worry about those anymore. And then this is my operating cost for the month. Remember, it's at 500, so my operating cost is 500, and then my end of the month capital is going to be 2,000. Okay, so you'll see right here, this says 50, right? And the reason why it is 50 is because, remember, it's not going to be going off of your total revenue. It's going off of what your new revenue was for the month, and then your expenses. Because you don't want to keep doubling up on, you don't want to keep saving money and calculating based off of rollover. Because the goal is you're going to take that rollover, and then you're going to calculate that up here out, subtracting that $50, because now that $50 technically should go here, because I have $50 now down up in my capital savings, right? And then I would do the same thing. So technically what I should have left over, this is the end of the month capital. This is 2,000. So I technically should take $50 from that. So I should be subtracting this from that, and then that will be my rollover for the next month. Okay. Now, that is totally up to you. I can go in, I can change this. Let's say I don't want to just put that much. I actually want to put more than that. I want to put 50% of that into my savings. So then I would just change it. So I would change that to 250. So now I am building up my cash reserve, and then I can still have operating capital within my business, but then I'm also saving, like I said, in my cash reserve. So I would just take the money from this, and then what I will be rolling over into this next month would just be 1,750. 1,750. And then I will go from there, because remember, this should be minus that. Now, if you don't deposit that money into your account, you actually are not due diligent and disciplined enough to actually take this money and transfer it over into your savings, that's up to you, but that will mess up the rest of the month. So you want to make sure that you are actually doing that. But that's the reason why I made this manual, because let's say you decide to keep all of this money in the business. This is just a suggested amount that you are putting into your savings. If you don't want to do it, you don't have to do it. You can use all of it to go into, your capital account, or you can say none of it goes into your capital account. But that's why this you can change to whatever you essentially want. So the last thing that you can do is you can actually go in, and let's just say you're under budget. You can say under budget, I use a coupon for heat press supplies. So that's something that you can put in your notes. You don't have to, but you can. Once again, it's flexible. So let's say you want to pay yourself $200 for the first 2 months, 3 months. and then you actually want to up your costs, and you say, I actually want to pay myself $300 because I want to make it a little bit worth my while. So let's just say every 2 to 3 months you want to up the ante, right? So then you'll say I want 400 these months. And then that kind of gives you an idea over here of what's happening. So you'll see right here, this is our total revenue for the whole year is 2,500. And then you'll see right here, this is one of my costs, which is my money, what's being paid to me. So I budgeted $2,300 for the year, and I've actually only paid myself $200 as of now. And then I have about $325 budgeted for my supplies. I underspent those obviously by $25, but you'll see right here, this is what my actual year to date is. So I'm $500. So technically this is only at 2,000. And then you'll see right here, year to date, this is what my goal is. In order to run my business, I need to have this much money. So what you can do is you can go in, like let's say you have subscriptions, or let's say you want to do certain things for your business, or let's say you want to budget in some type of equipment. You can do that. You can go in, and let's say you have a heat press. Let's say you're leasing your heat press. You can add that in as an expense. Or let's say you are paying a consistent amount for rent. Let's say that's what you want to do. You want to pay yourself for using rent in your house, whatever you want to do, right? You would go in and you would list that as an expense. You would add that in, and then right here would be the place that you would look. And this is basically how much money you need to actually run your business. At the end of the day, you want this to be in the green, because that's letting you know that you are breaking even for the whole year. You're budgeted to break even for the whole year based off of the expenses that you entered and you budgeted in. But you would want this to be green, and you would want this to be a number that's greater than 0. Okay, so. And then let's just say here we do have some assets or whatnot. We would enter those assets in, so we can actually balance like, hey, these are what my assets are. I hope you guys enjoyed. If you actually are interested in downloading this template, it is totally free. Please click the link in the description. It'll take you over to my website and you can have it. I'll see you guys in the next video.